So redemption of debenture means what? The amount of debenture will be repaid or returned to the debenture holder after a specified date as per the terms. The terms of redemption is clearly mentioned by the company in the debenture certificate. When the company issue the debenture, on that time company mentioned in the debenture certificate, while issuing the debenture certificate, stated clearly that this debenture will be redeemed after this period and the rate of interest on debenture will be this. As well as company mentioned these terms of redemption while issuing the debenture in the prospectus as well. So as per the terms of redemption, company will redeem the amount of debenture or repay the amount of debenture to the debenture holder. Okay. Now second point is the source of finance. Source of finance for the redemption of debenture. Company need money to redeem the debenture at the time of redemption. At the time of redemption, company need or require money to redeem the debenture. So what will be the source of finance? So source of finance may be out of capital. Debenture may be redeemed out of capital only. Second, debenture may be redeemed out of profit only. And third, debentures may be redeemed out of capital and profit both. When I am saying that the debentures will be redeemed out of capital, it means company is not going to create any debenture redemption reserve from the surplus in the statement of PL. From the surplus in the statement of PL, company is not going to create any debenture redemption reserve. It means when the company is going to redeem the debenture, on that time company issue the new securities in the market, maybe shares, maybe debenture, maybe public deposits, maybe bonds, maybe taking further loan from the financial institution, and from that amount company redeem the debenture. When I say that company will redeem the debenture out of profits, first one is redemption of debenture out of capital. Second one is redemption of debenture out of profit. When I say that the company will redeem the debenture out of profit, it means company is going to create debenture redemption reserve. Company is going to create debenture redemption reserve from surplus in the statement of profit and loss. Surplus in the statement of profit and loss. Before distribution of dividend, the company create debenture redemption reserve. This is a specific reserve company will create from that surplus amount before the declaration of dividend for this particular purpose. For the purpose is what? Redemption of debenture. Then we say that the redemption of debenture out of profit only. So redemption of debenture out of capital means company will issue the new securities in the market, and from that amount company will redeem the debenture. New securities means maybe issue of share, issue of debenture, issue of preference share, issue of bond, taking further additional long-term loans or loans. From that amount company will redeem the debenture. When I say the company will redeem the debenture out of profit, it means company will create DRR, debenture redemption reserve, out of surplus in the statement of profit and loss before the distribution of dividend. Third is redemption of debenture out of capital and profit both. Means some part of the debenture, some portion of the debenture will be redeemed out of capital, some portion of the debenture will be redeemed out of capital, out of profit. Okay, some part will be redeemed out of capital, some part will be redeemed out of profit. Now come to the section 71. This is very important section. Section 71, subsection 4 of the Companies Act 2013 and SEBI guidelines, Security Exchange Board of India guidelines. What is the guidelines? Guidelines requiring the creation of DRR, regarding the creation of DRR. So section 71 subsection 4 of the Companies Act 2013 and SEBI guidelines regarding the creation of DRR, a listed company listed company means the company which are listed in the stock exchange, they are not required to create DRR. Listed companies are not required to create debenture redemption reserve. The company which are listed in the stock exchange. All the public companies are listed in the stock exchange. They are not required to create DRR. As per the section 71 subsection 4 of the Companies Act 2013 and SEBI guidelines. Now, second is unlisted company. If the company is not listed in the stock exchange, then that company is required to create DRR. They are required to create DRR. Are required to create DRR. At least 10% outstanding debentures out of divisible profits and remaining 90% redeemed out of capital. Okay, so at least suppose the outstanding debenture is 10 lakhs. Outstanding debenture is rupees 10 lakhs. This is the outstanding debentures. So at least 10% of this is how much? 1 lakh. For 1 lakh, company will create DRR. At least 10% company have to create DRR, and for remaining means 9 lakhs, company redeem it out of capital. So company at least 10% of the debenture outstanding. Is it clear? At least 10% of the debenture outstanding out of divisible profit means surplus in the statement of PL. Surplus in the statement of PL, from that amount, that surplus company has to create DRR at least 10%. And remaining 90% company may redeem out of capital. So here this is for unlisted company. For listed company, they are not required to create DRR. For unlisted company, 10% will be redeemed, or at least 10% of the debenture outstanding will be redeemed out of divisible profit by creating DRR, and remaining 90% will be redeemed out of capital. Okay, the DRR which is created by the company, that is the surplus in the statement of PL. From that amount, company create DRR before the distribution of dividend. Before the distribution of the dividend, and from DRR amount, dividend will not be paid. That is in reserve specifically for redemption of debenture. This DRR, debenture redemption reserve, will be reflected in the reserve and surplus under the equity and liabilities. Heading is shareholders fund, subheading is reserve and surplus. Under this subheading, debenture redemption reserve will be shown or presented by the company. Debenture redemption reserve, debenture redemption reserve. This will be shown under which subheading? Subheading reserve and surplus, under the heading shareholders fund. Side is which side? Equity and liability side of the balance sheet. Equity and liability side, heading shareholders fund, subheading reserve and surplus. Under this subheading, debenture redemption reserve is shown in the company balance sheet. Is it clear? Now next important thing is what? Every unlisted company has to invest or deposit 15% of the debenture amount. Okay, 15% of the debenture amount on or before 30th April. The debenture which is going to redeemed in the next financial year up to 31st March. Every unlisted company has to invest 15% of the debenture amount on or before 30th April. The debenture which is going to redeemed in the next financial year up to 31st March. So the rule is as per rule 18 subsection 7 clause C, 18 subsection 7 clause C of the companies share capital and debentures, Rule 2014, every unlisted company means the company which are not listed in the stock exchange, required to create DRR, which we have discussed earlier, shall before 30th day of the April each year, means 30th April each year, deposit or invest a sum which shall not be less than 15% of the amount of its debenture. Shall not be less than 15%. It may be more than 15%, but it shall not be less than 15% of the debentures maturing, means which are going to redeem during the year ending 31st March of the next year. The debenture which is going to redeemed on 31st March of the next year, that amount of debenture, at least 15% of that debenture amount has to invest in this financial year up to 30th April, or to deposit up to 15% or invest up to 15% in the market. So this rule is clear. This is for whose unlisted companies. So as per rule 18 subsection 7 clause C of the companies share capital and debentures, to rules 2014, every unlisted company required to create DRR. This is mandatory for them, required to create DRR. How much? 10% they have to create DRR. Okay, 10% as per SEBI guidelines and Companies Act, they have to create at least 10% DRR. Shall before 30th day of the April each year, means up to 30th April each year, deposit or invest, either deposit or invest in the market a sum which shall not be less than 15% of the debenture maturing. Suppose debenture is going to mature 10 lakhs debenture, so 15% of 10 lakh, 1,50,000, at least 1,50,000 has to deposit in the government securities or bank or invest during the year ending 31st March of the next year. The debenture which is going to maturing during the year ending 31st March of the next year, that amount of debenture, at least 15% of that amount has to invest or deposit on or before 30th April in this year. Next rule is, this is for listed company. This is for listed company. For listed company, DRR, creation of DRR is not mandatory. It is not required to create DRR for listed company, those who are listed in the stock exchange. We have discussed it. For them, as per the rule 18, sub-rule 7 of the company's share capital and debentures, amended rules 2019, rules is amended in 2019, dated 16th August 2019. Every listed company, this is for listed company shall also deposit or invest at least 15% of the debenture maturing during the next year. At least 15%. Company may invest 100%, but minimum is 15%. For listed company and unlisted company, for both, at least 15% investment or deposit, invested or deposit of the debenture which is going to mature in the next financial year, at least 15% of that amount has to invest or deposit up to 30th April of this financial year, in this financial year. Okay, this is the rules related to investment of debenture redemption investment. This is the rules related to debenture redemption investment. Debenture redemption investment. Investment of debenture redemption. Investment of debenture redemption. Okay, debenture redemption investment. This is the rules related to this particular debenture redemption investment. So how much? At least 15% of the debenture which is going to redeemed in the next financial year, 15% of that amount has to minimum at least invest or deposit. Next is method of redemption of debentures. Method of redemption of debenture. Debentures. Method of redemption of debenture. The amount of debenture may be redeemed by the company at a time. Full amount will be repaid to the debenture holder at a time. This is called lump sum amount will be paid to the debenture holder after a specified period as per the terms. Whole amount of the debenture will be repaid to the company, repaid by the company to debenture holder after a specified period as per the term. This is called lump sum payment at the end of fixed period. Suppose company has issued 10 lakh debentures and the term of redemption is what? This will be redeemed at par after 3 years. So after 3 years, company will repay the whole amount, that is rupees 10 lakh, to the debenture holder. So this is the first method of redemption. The whole amount will be repaid to the debenture holder after the fixed period. Second method is, the amount of debenture may be repaid by the company in installment by drawing of lots. Suppose company has issued 10 lakh debenture and company will redeem this 10 lakh debenture in installment. Suppose company has made a 5 installment of rupees 2 lakh. So every year, suppose at the end of every year, company will redeem 2 lakhs debenture. So first year, at the end of first year 2 lakhs, at the end of second year another 2 lakhs, at the end of third year 2 lakhs, at the end of fourth year again 2 lakhs, and at the end of fifth year 2 lakhs. So 2 lakhs into 5 installment. 10 lakhs is redeemed by the company in 5 installment by drawing of lots, means through the lottery system. Okay, whose lottery has come, we will draw a lots, and lot means lottery. Through the lottery we will redeem the amount of debenture to the debenture holder. So this amount, the amount of debenture will be paid, not whole amount will be paid at a time. The entire amount will not be paid at a time. This amount will be paid in installment. Maybe the installment may be 10 lakhs debenture may be repaid by the company in 3 installment. Maybe after 3 years 2 lakhs will be repaid. After 4th year 3 lakhs will be repaid, and after 5th year remaining 5 lakh rupees will be repaid by the company to the debenture holder. This is called redemption of debenture in installment by draw of lots. Lot means lottery system. By purchase of own debenture from the market. Sometimes company purchase his own debenture from the open market. Okay, from the open market company may purchase his own debenture. Okay, if the company don't need any sort of debts capital, then the company may give an offer in the market that company is ready to purchase his own debenture. So those who are interested to sell off, they may redeem their debenture. So purchase of own debenture in the open market. Last one is conversion. Debenture may be converted into share, or debenture may be converted into new class of debenture, or debenture may be converted into preference share. This is the conversion. Redemption of debenture may be done through the conversion. So debenture may be converted into equity share, means debenture holder become the equity shareholder. Debenture may be converted into new class of debentures. Suppose earlier 9% debenture was issued. Now in conversion, company is going to give a new class of debenture whose rate of interest is 10% with the new terms and conditions. So this is called conversion. The company is not going to pay the amount. Company will take the one debenture certificate, will take it back, and in place of this certificate, company will issue the share certificate or new class of debenture certificate or bond or preference share. So that is called conversion into new share or new class of debentures. So company may redeem the debenture. Method of redemption of debenture: lump sum amount, means whole amount will be paid at the end of fixed period. Second is amount will be paid in installment. Third is amount of debenture may be purchased by the company from the open market. Own debenture may be purchased by the company. Own debenture may be purchased by the company from the open market. Through this way, company also redeem their debenture. And last one is company may redeem the debenture by conversion method. Debenture will be converted into share. Debenture will be converted into new type of debenture, new class of debenture. Okay, so these are the 4 method of redemption of debenture. Now next is exemptions for the creation of DRR. Who will not create DRR? To whom the SEBI and Companies Act 2014 has given, Companies Act 2014 has given exemption. So exemption is given, exception to this, exception to the rule of creation DRR. Number 1, all India financial institution regulated by RBI, Reserve Bank of India, for public as well as private issue of debenture. Second is banking companies for both public and private issue of debenture. Third is non-banking companies registered with the RBI for public issue of debenture, not private, public issue of debenture. Housing finance companies housing finance company who are registered in the National Housing Bank for public issue. Who are registered with the National Housing Bank for public issue of debenture. And last is all listed companies. They are exempted for creation of DRR. So all India financial institution regulated by RBI for both public as well as private issue of debenture. Second, banking companies for both public and private issue of debenture. Third is non-banking companies registered with the RBI for public issue of debentures. Next is housing finance corporation or companies registered with the National Housing Bank for public issue of debenture. And last one is listed company, all listed companies. Now see the journal entries. If the company is a unlisted company, company is unlisted where the DRR has to be created at least 10% of the debenture outstanding. So the journal entry is when the company is going to, unlisted company is going to create the DRR, this will be created from the surplus in statement of profit and loss. Surplus in statement of profit and loss account debit to debenture redemption reserve. So unlisted companies at least 10% of the face value of the debenture outstanding. Suppose the debenture outstanding is 10 lakhs. So 10% of 10 lakhs. So 1 lakh. So this will be created, entry will be surplus in statement of PL account debit 1 lakh to debenture redemption reserve 1 lakh. Next is investment. Debenture redemption investment account debit to bank account. The investment at least 15% of the debenture which is going to redeemed in the next financial year. So 15% of the value of debenture to be redeemed in the next financial year. So up to 30th April of this, the entry will be debenture redemption investment account debit to bank account. Suppose 10 lakh debenture is going to redeemed in the next financial year. So up to 30th April, 15% means 1,50,000. 1,50,000 debenture has to be, that amount has to be invested or deposited in the government securities. Okay. So debenture redemption investment account debit to bank account. At the time of redemption, this investment will be sold. So bank account debit to debenture redemption investment account. This is for encashment of investment at the time of redemption when the money is required to repay the amount of the debenture to debenture holder. On that time, that investment will be sold. So bank account debit to debenture redemption investment. Now these two entries for redemption, debenture account debit to debenture holder, suppose 10 lakhs debenture is going to redeem. So debenture account debit 10 lakhs to debenture holder 10 lakh and debenture holder to bank account 10 lakhs. And finally at last, debenture redemption reserve balance will be transferred to general reserve. So last entry is transfer of DRR to general reserve. So debenture redemption reserve account debit to general reserve. Okay.